What's going on YouTube? Welcome back to Currency Counts, where I cover all things money. In today's video, I wanted to talk about car buying and why this might not be the best time to buy if you're looking for your next vehicle purchase. See, there's a lot of ads out there saying there hasn't been a better time to buy, but I don't believe that for a second. What's happening right now is the car buying bubble is stretched so thin that it's about to pop. There's a lot of things that make this car buying bubble happen, but a big one is the stimulus checks. Back in 2020 and 2021, people that were out of work were collecting stimulus checks plus their unemployment. So if you were making between $1,200 to $2,000 a month, now you're making upwards of $4,000 a month. You have all this extra money. The first thing you want to do, for the most part, a lot of people, is buy a new vehicle. So 2020, 2021, you might have seen a lot of paper tags on the road and wondered, how are these people buying these vehicles if everybody's out of work? Nobody's working, high unemployment, what's going on? Well, the stimulus checks is what's going on, right? You have the unemployment plus the $1,200, $1,500, $2,000 stimulus checks that were coming in. So people that couldn't otherwise afford brand new vehicles or high ticket vehicles were going into the dealership, now showing they made $4,000 a month versus $1,500 to $2,000, and they were being approved for $50,000, $60,000 vehicles with a note of $1,000 a month, more or less. Cool, everybody's happy. The banks are happy because they're lending money and collecting their interest. The customer's happy because they have a brand new vehicle. But what's happening now today is that people are going back to work. The stimulus checks have stopped, the unemployment checks have stopped, and now what? You're going back to making $1,500 to $2,000 a month. There's people that haven't even gone back to work and they're still unemployed and they still have that $1,000 car note. So what do? You can't make your payment. What happens? Your vehicle gets repoed, and that's happening all over the place. You go from making $4,000 back to $1,500, $2,000. You have half of your monthly income going towards your car note. So what a lot of people are doing is they're just electing to give it up. They might hold off as long as they can, but in the end, that vehicle is going to get repoed. So that's actually what's happening right now. We're seeing that right now. This is kind of the same thing that happened in the housing bubble back in 07, 08. People getting approved for loans they had no business being approved for. Now, a few years down the line, they can't make that payment anymore and the house gets foreclosed on. So what's happening here with the car buying market is the banks are starting to see a lot more repos because people can't make their payment anymore. So what do the banks start to do? Pull back on financing, make things a lot stricter. For example, prior to this huge bubble that's been created, you might be able to walk into a dealership with only 3 months of employment history and get approved. Now, you're going to have at least 6 months of payment history. This is depending on the bank, right? Some banks might still be doing 3 months, but for the most part, a lot of the big banks are going to require you to have at least 6 months, even a year of employment history. They were also approving a high percentage LTV, loan to value. For example, if a vehicle was only appraised at or only worth $20,000, but because of all this inflation and the bubble that's been created, it's being sold for $30,000, the bank was actually approving the full $30,000. But now what's happening, if the car's only worth $20,000 and being sold for $30,000, well, you're gonna have to pay that difference, right? Because the bank doesn't want to be upside down on that. You'd actually have to put $10,000 down on the vehicle, or whatever the difference of the LTV was, that loan to value. So now we're starting to see the supply go up because of all the repos, and the demand's getting lower because the banks aren't lending as much. So when that happens, you're gonna see that pricing start to come down. All the overinflated, bloated pricing is gonna start to lower. That bubble is just gonna pop. You're gonna see vehicles that were $40,000 drop dramatically. They might drop $5,000, they might drop $10,000 in the price. And that's actually what's happening right now as we speak. Last year I was looking at used SUVs, and the one I was looking at, the year I was looking at, was going for about $33,000 to $35,000. I just saw one the same year, same mileage, going for about $21,000, $21,900 to be exact. That's on the low end. Right now they're like 25, 26, but that's way down from the 34, 35 they were last year. And you're gonna see all those auto prices start to plummet. A lot of analysts out there are telling you the car market's strong, but the writing's on the wall. You can see the proof for yourself. So if you're in the market for a new vehicle, you're gonna wanna wait a few months. But just like the stock market, you're gonna wanna get in at the right time. You don't wanna wait too long, because as the prices start to fall, more people are gonna see that and they're gonna start to buy, which is gonna increase the demand and lower the supply. So you're gonna be right back where you started. Just wait a few months, compare prices, and get in where you're comfortable. I wanna thank you for watching. I hope this video helped you out. Check you on the next one.